All right, well, for the past several weeks, we have been very pleased to have Steve Sexton on, president of the Sexton Advisory Group, providing viewers with important financial information as part of our weekly Money Minute segments. This week, Steve shares some important ideas about a timely and critical topic, taxes.
Thanks and hello everybody. This is Steve Sexton with this week's Money Minute. Now we're talking about taxes. What can you do now before April 15th? If you haven't taken your required minimum distribution and you're over the age of 70, you can take 2010's required minimum distribution right now. If you're looking to defer more money, you can actually put more money into your IRA if you're still working. Now, for those people who aren't working or want to save taxes moving forward, there's many things that you can do. Number one, you want to take a look at what's happening with your income streams, meaning if you got pensions, Social Security, and you have your required minimum distribution already going onto your tax return, and that's paying for everything you need to spend this year, and on top of that, you have a trust account or a CDs that are still paying interest income, capital gains, or dividends that's causing your taxes to go up, and you're paying taxes on money you're not even spending. That means money's falling through the cracks into the tax man's hands. And you know what? Nobody says that you don't have to pay more than your fair share. So let's make sure you're not. And here's how. You want to look at tax deferral, longer-term investment choice strategies, as well as tax-free income strategies. You're still going to get a great return, but it's not going to flow onto your tax return, and that'll save you a lot of money in 2011. Now, in 2013, you got to remember, taxes are going up. So that means dividends are going to go from 15% to 39.6%. So that means if you get $10,000 of dividends now, you're paying $1,500 in taxes. In 2013, you're going to pay $4,000. That's a gigantic tax increase. If you're also getting capital gains and you're in a 15% tax bracket and you're taking those capital gains now, you're paying zero. In 2013, you're going to pay a whole lot more at 15 and possibly 20%. But on top of that, tax brackets are going up. The 10% tax bracket is going away. So if you're in a 10% tax bracket, you're going to go up to 15. So it makes a lot of sense to put the planning into place now as opposed to kicking the can down the road and saying, oh my God, I've got to pay more taxes. So that's the tip for today. If you have questions how to best handle your taxes and make sure you pay the least amount and stop that money from falling through the cracks, give us a call at 1-800-560-2611 or go to our website and ask a question at www.sextonadvisorgroup.com. Now remember, smart financial decisions do impact the quality of your life.